Welcome. Today, I have a bit of a rant for you. I'm a little self-conscious about it, but I had an experience last week that drove me bananas, and I need to talk about it. I witnessed a lawyer giving wrong advice in a group setting to people about S corporations, and it just almost made my head explode. And I just wanted to record a podcast to talk to you about getting your information about your entity choice. When you talk to a lawyer, expect legal information. That's reasonable. But if you want advice about a tax entity, and an S corporation is a tax entity, you file for your application for an S corp with the IRS, right? Not like an LLC where you file with the Secretary of State. So super important to realize that the S corporation is a tax status. It's a taxability. And I witnessed this lawyer giving totally wrong information, giving advice that would be damaging and negative to people, saying things that were wrong. And I was just like sitting there trying not to make horrible faces. So I'm going to tell you, I will not name this person. And I do also want to say, just, in case she ever hears it, I think she's a good lawyer. You know what? This is actually not saying that lawyers are bad lawyers or that this one in particular was a bad lawyer. What I'm saying is S corporations are tax. It's a tax thing, right? And she is not the first lawyer I have witnessed give bad advice about S corps. And I know this because I see the finances of so many people who form S corporations thinking they're doing one thing without realizing all the tax implications. And it's all tax implications. That's why you make one. And so I know that this is common. I know that this happens. And I know that a lot of you have gotten bad advice from lawyers about this. Please don't eat me if you're a lawyer. I'm saying, please, get your legal advice from a lawyer. That's really important. But this one just was driving me crazy. So let me jump in and tell you what you should not do, what you need to know about S corporations. And I want to talk to you about 5 mistakes I see that will cost you thousands of dollars when it comes to your S corp. So make sure you talk to a tax person about this. Also, in case you're wondering, I'm not trying to make it a mystery. One of the most frequent conversations I have in my one-on-one sessions with people is about this. It's exactly about this issue, entity choice. What entity should I choose for my business? And there are several different issues layered on top of each other. There's your legal entity and there's your tax entity. And these are 2 layers that can sit right on top of each other and coexist. As a tax person, I have to learn about the legal entity. That's called an LLC. And I've taken business law courses for credit. And so I actually have training on LLCs. But of course, I also have taken, really extensive education about business entities for taxation. So S Corps, C Corps, partnerships, et cetera, right? These are tax entities. And so I love sorting out who goes where, what does what, and what your obligations become once you form one of these entities. This is one of my favorite conversations to have. And one of the reasons, honestly, is because lawyers only know the legal side. That's fine. That's appropriate, right? But someone like me knows both sides, and I can really tell you how they interact with each other, what the S Corp is going to require of you ongoing, why it might not be worth it for you yet, or at what point to start thinking about it, at what point it's going to become worth it, right? These are really important issues. All right, so let me jump right in. All right, so, okay, number 1, an S Corp, you're stuck with an S Corp for 5 years. When you make an S Corp election, you must stay with it. You have it for 5 years. You cannot undo it again immediately. I say this because I witnessed this lawyer on this public setting say otherwise. She said, oh, you can always undo it, right? That's not true. You can't undo an S Corp for 5 years. So it's really important that you know where your break-even point is on having an S Corp, forming an S Corp, that you know where your tax savings is. P.S. Your tax savings is about self-employment tax. That's the money you save. So that's really, really important because you are stuck with it. When you elect an S corporation, we don't do that to save you money in 1 year only. We have to look into the future and see if there's a probability that this income is going to be consistently high enough for you to break even. Because having one great year, you get a huge grant. Yeah, maybe in that year you'll save some money with an S Corp, but then if your income is going to go back down again, as it often does, if you are a person who, for example, got an enormous grant 1 year and then goes back to a modest income again, it might be counter to your interest to form an S Corp just for that 1 year. All right. Number 2, there is no legal protection to having an S Corp. This is another wrong thing I witnessed this lawyer say. There is no legal protection. Legal protection is there for you with an LLC. An LLC is a legal entity. And so, yes, you put a liability shield in between your business assets and your personal assets when you form an LLC. But an S Corp is a tax entity. It is not a legal entity, and there is no legal protection when you have one. Okay. So would you want to go form an S corporation thinking it gives you a legal protection and then realize it doesn't the hard way? Hell no. I hope you don't. So I hope I'm saving you from that one. All right. Number 3, an S Corp is not either or when it comes to an LLC. This is another wrong thing I witnessed this lawyer say. You don't make a choice between having an LLC or an S Corp. I am a good example of that myself. Me at Sunlight Tax, I have an LLC and an S Corp for my business, right? An LLC, so you know, that is a legal limited liability corporation. You do the formation at your state level with your state, and there's some obligation that comes with that you should know about. But you form it at your state, and that's your liability protection, okay? It does not change your tax status at all, not at all, okay? There are some defaults that an LLC goes to. If you're a single member LLC, you will default to being taxed in the way you were last year on, as a self-employed person filing on a Schedule C. If you're a multi-member LLC, you will default to being taxed as a partnership. And that's reasonable because if you have multiple members, you've got more than one person or entity who has money who can be taxed. So the IRS is going to say, well, you're multiple entities, we're going to tax you as a partnership. But you can elect something else and be taxed as something else. You don't have to accept the thing that was the default, but IRS sets defaults for you on those things because it needs it, because it needs to know how to tax you. All right. So for example, I have an LLC and an S corporation, and you can have that too. You can be an LLC that is taxed in any of the ways that a person or entity can be taxed in the US tax code. You can be an LLC with no tax entity, right? And in fact, that's how Sunlight Tax started. I was an LLC with no tax entity, right? And then later I formed an S Corp, right underneath the same LLC. So you can do that. You can be an LLC that's a nonprofit. You can be an LLC that's a partnership. You can be an LLC that's a C corporation. You can be an LLC that's an S corporation. Okay. So forming an LLC doesn't limit you in any way about how you get to be taxed. You get to make a separate and distinct choice about how you get taxed when you have a business, and it actually is completely independent of whether or not you have an LLC. So you want to make your decision about whether you form an LLC independently. Do I need an LLC? What will that do for me? Do I want to do that? And then you make a tax choice decision, and that is also a completely separate decision. It covers separate areas. Okay. All right. Number 4. The number one reason to get an S Corp is about saving money on self-employment tax. So this is interesting. And I've had other conversations with attorney friends of mine. Please understand, attorneys are great. I have one, I consult them. You need attorneys, right? But stay in your zone, attorneys, right? Don't go giving bad tax advice. That's my rant. But I have had conversations with attorneys who understand some of the legal side of an S corporation, but never knew anything about the math, about why it saves you money, right? And like I said, where do you elect to become an S Corp? It's through the IRS. It's a tax thing, right? So the point of an S corporation, just so you understand, it's about saving you money on self-employment tax. But, and this is number 5, my number 5 warning to save you money, don't do it too soon. All right. If you just have a knee-jerk reaction, if you just talk to business friends who are just, throwing out a lot of terms and saying, oh, you have to do this basically because I did this, right? That's not good business advice. You need to look at the facts and circumstances of your own business each and every time to say, is this actually appropriate for my business, the level of the business that I am operating right now? Okay. So super, super important. Because I see this mistake, people come to me with their taxes and I see that somebody formed an S Corp for them way too soon. And so they lose money on it. They spend more money to have the S Corp than they save in self-employment tax. There is a break-even point with S corporations. And if you are forming one, you should have your accountant go through the math with you and show you the break-even point. And if you aren't making enough money to be breaking even on it, you shouldn't get it. It is that simple. Okay. So I hope that really helps you stay out of the hot water that I frankly see too often. And I unfortunately had illustrated for me very clearly to my absolute horror just a week ago. Okay. What was the other thing? Oh, the last thing I want to tell you too. S corporations, if you are in New York City specifically, you need to be extra careful about forming an S Corp. The savings on an S Corp is going to save you even less in New York than it would in another state because there's some special rules. There's an extra tax you're going to pay in New York that's going to cancel out some of the benefits. So you want to be very careful that you really have an accountant who knows their shit and is going to tell you the right thing. Okay, so that's my little warning. That's my little rant for you. The other thing is, if you were talking to, here's a bonus horror story. If you're talking to somebody like a lawyer who doesn't know the rules about S Corps, or a friend who's just saying, oh, I did this, you should do this. The other thing I want you to know about having an S corporation, it obligates you to file a new and additional tax return called an 1120S. When is that tax return due? Is it due April 15th? Oh, no, it's not. It's due March 15th, right? So I have seen this before. Somebody gets an S election, they have an S Corp, and they come to me to do their personal income taxes. And I'm like, did you file your 1120S? Did you file your S Corp tax return? And they're like, no, what? What are you talking about? I'm like, your return, that business return, because you form this entity, you're now obligated by the IRS to be filing an 1120S. It's due March 15th. You're late. And that's a terrible conversation to have. And I've had it a million times. And so I'd like you never to have that conversation with a tax person. So you should know, if you form an S corporation, you're going to have higher accounting fees. So you're going to need to pay an accountant to do an S Corp filing for you, right? The 1120S return. And that's not a one-time thing. So the S election is a one-time thing, but the tax return, that's going to be due every year. So that's going to mean you have 2 tax returns due every year, one March 15th, one April 15th, right? S Corp is due on March 15th. Your personal return is due April 15th. All right. Oh, that was a bit of a rant. I really don't mean any offense to lawyers who I love and appreciate the work that all of you do, all you attorneys out there, but please don't give bad tax advice to your clients. I don't like it. It makes me kind of mad. All right. All right. So, last thing I want to tell you is what can you do, right? If you're feeling confused, maybe you've been in these conversations where like people are like, oh, you have to form an S Corp, blah, blah, blah. Or you're hearing all this stuff. I just want to warn you, there is so much wrong information going around about these things. And sometimes the wrong information is coming from someone you think should know, right? So I want to just make it clear to you that I offer a service and it is very rare, right? Usually when you want to talk to an accountant, you have to go through a whole vetting process with them, sign on, be onboarded, and you become a client. You're obligated to go to them for your taxes. Well, you actually can't get in to do your taxes with me. My tax practice is not accepting new clients. But what I do offer is one-off consultations on exactly this kind of thing, because I find this confusion so pervasive, so consistently happening, that I really like to be available for one-off sessions to talk about entity choice, to talk about LLCs versus S Corps and what they actually mean and what it requires of you, both expense-wise, tax return-wise, tax savings-wise, legal obligation-wise, et cetera. So, unlike most accountants, you can have a one-off conversation with me. Those consults, I like to think of them as air traffic control, right? I give you a list of like, okay, here's what you need to be concerned about. Here's the things to think about. Here's the point financially at which this actually makes sense. You may or may not be there yet. And then I like to give some, like I said, air traffic control. This is a question for your lawyer. This is a question for your accountant. This is something you can do yourself at this website, etc. Right? That's how these conversations go. It's my favorite one to have because there's so much sorting to do in the world. There's so much bad advice in the world. I'm so honored to sort it out for you. So if you're interested in those, you can just go to sunlighttax.com, scroll to the bottom. There's a big black button at the bottom that says book a one-on-one. And that's what that's for. Also, I just will let you know, those one-on-ones are available to the general public, just one-off, and you can book one at any time. But if you're in my program, if you're in Money Bootcamp, those are half price for 1 year while you're in Money Bootcamp. So you get as many of those as you want at half the price that the general public pays. So if you wanted to look at Money Bootcamp and think about doing it that way, where they're half price because you were thinking about joining the program anyway, you can watch a free class and join and actually get a free consultation with me by going to go.sunlighttax.com/register. And that's where you watch a free class. And I give the offer in there for this free session with me when you join Money Bootcamp. So you can get one actually for free by going to go.sunlighttax.com/register. And if you are, kind of doing your own thing, you don't want to make the commitment of joining Money Bootcamp, but you're interested in one of these one-on-one calls, maybe you've had some bad advice on an S Corp, you're confused, LLC, S Corp, partnership, etc. You can go to sunlighttax.com, scroll to the bottom, and there is a big black button that says book a one-on-one. All right. I hope that today this helped you sort out some of the key confusion. And if you want to book a one-on-one and talk about the specifics of your situation, maybe your income level, your liability issues, you can book that one-on-one with me, and I will be so happy to sort that out for you and help get you on the right footing. All right. I hope that's been super helpful for you. Thanks for listening today. Bye.